Gold rallying this morning, but what are the price drivers? Joining me is Vince Lancy of FMX Connect. Good to see you again, Vince.
Good morning. Nice to see you too.
So, Vince, from what I understand, a lot of people feel this price rally is driven by the situation in Europe, but you feel otherwise.
Yeah, I don't think it's a minority take, but it is a little different in the sense that, well, first of all, what's going on in Europe, Greece specifically, certainly is contributing in some way to uncertainty. More uncertainty comes out of Europe. You see people look for safe havens. But the actual lowering of interest rates by the ECB this morning, that's not bullish for gold if gold is a dollar denominated asset. But yet here we are with gold following through yesterday afternoon's rally.
Right, and Vince, I've been asking other experts I interviewed this week about the upcoming referendum in Greece and what outcome would be needed to be bullish for gold.
I look at it kind of digitally right now. The lack of outcome is bullish for gold. Continued uncertainty is bullish for gold as a driver behind gold. But I tend, and I might be getting off topic, but I'm focusing on domestic policy and the Fed's meeting yesterday as the primary driver behind gold and other asset classes price jumps today.
Right, Vince, let's bring it back home and talk about that meeting yesterday. Some experts I spoke to thought it had little impact on the precious metals landscape, but you think otherwise.
The meeting itself was vanilla, and it was already scripted and sent out beforehand. What came up that wasn't, I wouldn't say is revolutionary, it had been talked about, but the Q&A afterwards, the Fed Chairman Bernanke was asked a couple questions in different ways, focused on MBS, which are mortgage-backed securities. And he was asked, would you consider buying mortgage-backed securities for the government's portfolio? And he said, we would, it's a tool in our toolbox. We would do what we think is need to be done. And the market interpreted that, the gold market interpreted that in knee-jerk fashion by rallying. And it finished up on a day yesterday. Bottom line is, Bernanke is thinking about QE 2.5. They're going to basically put more money into the market and add liquidity. And overnight, and the dollar sank, gold rallied, oil rallied, stocks like that information, even though he hasn't said he's doing anything. So overnight, the market continues stronger. We come in this morning, and I guess people who caught the news late are saying, looks like more accommodation by the government is going, I'm sorry, by the Fed is going to happen. And assets went up. And gold is now acting it's acting as a safe haven against Europe and inversely related to the dollar at the same time. So you have all the good things happening for gold again.
Vince, why are you calling it a QE 2.5 and not a full-fledged 3?
He's agreeing to add assets to the portfolio. They're not going out there and starting a new open market committee action. They would just be adding assets. They would be taking money on bonds that they currently have in their portfolio and selling those bonds out and buying mortgage-backed securities. It would be a big help to the economy, and it would give rise to many assets. But it's not a quantitative easing per se, but it has the same effect in a smaller way.
Right, Vince. And offline, you were telling me how traders started buying risk-on assets yesterday afternoon as a result of the meeting. This is a big reason for today's follow-through. Can you explain to our viewers what you mean by risk-on assets?
If you believe that the global economies are essentially tied together more so than they have been in the past, and they are, then you believe that a big driver behind asset prices, whether it be stocks, bonds, or commodities, are basically are a function of government policy or Federal Reserve banking policy. So interest rates, monetary and fiscal policy, are affecting everything one way or the other. So you're seeing correlations go to 100%. So if the Fed eases interest rates, that's bearish for bonds, if the Fed buys bonds, that's bullish for bonds, bearish for the dollar, and bullish for risk-on assets like stocks and commodities. Why? Because with more money floating around and lower rates in bonds, you're going to put your money somewhere. Risk-off would have the analogy of safe haven. So we don't think the Fed's going to be accommodating. We think there's a problem in Europe. That would raise the price of gold and bonds while crushing equities. and riskier assets.
So basically, Vince, what you're saying is that the price drivers here today are the future Fed action and what has become the European circus, as you say, and not so much jobless numbers coming out.
Right. The jobless numbers came out today. If you want to microanalyze it, you would look at the jobless numbers and say, well, that was mildly bullish for the economy, which would make Bernanke less likely to, put more money into the economy. But the market didn't care. If you look at it chronologically today, you had the dollar weaker, gold higher, and then the ECB lowered interest rates, which should be bearish for gold, and gold said, I don't care, and it just kept going. So the market's turned around. We talked about this a week or two ago. A bottom could be in, a bottom could be nearing. Load your guns. Well, here we are, and the market's moving.
Finally, Vince, let's look at the charts you sent me today. What should we be paying attention to?
Well, one of the charts, there is a trend line, an upsloping trend line. That's part of the ascending wedge that we had. That's a blue line, and that's the daily chart. That line we think now serves as support now that the wedge has been broken and rejected. Above the market, we see 1789, which was a daily high on September 22nd, we think. That's a level to look at as a target if you're buying into this market, trading into this market, not investing, I should say. On the other hand, people are already talking about gold being in overbought territory. If you look at the stochastics on the daily chart, they look overbought. But we're not worried about that because we think fresh money is coming into the market again. And if you change to instead the weekly chart, you can see on the stochastics circle there, we're far from overbought. So pullbacks are to be bought now, not sold.
All right, Vince, let's bring it home to viewers. Let's do a final wrap up, final thoughts.
Precious metals might be hitting the sweet spot again as a safe haven and as a hedge against domestic inflation.
Okay, the sweet spot.
Sweet spot.
All right, thank you, Vince, and thank you for watching. You can email me your comments and questions and newsfeedback at kitco.com. For Kitco News, I'm Daniela Cambone.